Welcome to the She Builds Show. I'm your host, Stefanie Olson, a licensed general contractor who builds new construction, renovates, and designs your vision. Today, more than ever, we need raw, authentic women who are willing to rise above society's norms, break those glass ceilings, and encourage each other to boldly build the life we were meant to live. So, honey, what are you building? All right, welcome to the She Builds Show. We have a guest today with kind of a spin on our topic. We are dealing with Jennae. I'm going to say your last name. Leisey. I was like looking at it like, I'm going to say that wrong. I'm sure people butcher your name like crazy. Well, welcome to the show, Jennae.
Hi, I'm so happy to be here.
Thank you. Okay, so tell the audience what you do and the name of your company.
Oh boy. So I am a correspondent lender, and it's funny, I left retail lending, and so I'm still kind of used to like who I work for, but I'm self-branded. My company's name is JL Lens, and I do residential lending for all things construction from ground up, tear down, renovation, all that fun stuff. So it's a pretty dynamic world right now.
That's awesome. So you do loans for people who are building, remodeling, buying,
correct,
anything like that. Okay. Give me a little bit of history. So you were in retail lending, and then I read a little bit about you, got a little frustrated. I feel like every good businesswoman starts with being pissed off or angry or frustrated at something. Maybe not. I'm going to test my theory.
Oh my gosh. That's too funny. In a way, sure. I've worked in real estate in general for about 15 years. And, the 10 of those years were residential lending. In that time, I worked primarily in operations, and we did, I worked on renovation and construction loans and, in the operations world way back in the day. And then fast forward to 2020 and 2021 were probably, anybody you talk to that worked in real estate during, COVID and beyond was, oh my gosh, it was exhausting. We were all burnt out. We worked so much. And in that process, just kind of saw my life kind of happening while I'm just kind of watching it through a window. Mostly like, I always think of this moment watching my husband and my son outside my office window. He was like learning how to ride a bike. And I'm like, what am I doing in here? And why am I not out there? And my husband and I for years talked about buying land and building and, kind of slowing things down a little bit and getting more, more spending time with our family. And after those 2 super rough years in lending, I was like, we got to do this. And my husband's like, yes, let's sell the house. Let's buy some land. Let's, raise our kids on some land. And, as I was kind of seeing this kind of shift in my career happen with just the overwhelm of working on a team and doing so much business, I was like, as an individual, I don't need to do this much business. I can slow down. I can do kind of more of these like very specific products. And oddly enough, during this time that we're kind of going through this, hey, we're going to buy land or we're going to build, I started researching construction lenders and looking at, where could we get a construction loan? And because the retail lender that I worked for didn't offer construction loans because they're usually bank products. However, what I noticed was either I was finding super shady lenders online, or I'd go to banks and yet they had absolutely no idea what they were doing. Like they were selling this product,
but they didn't know how to service it.
Correct. Like they didn't know what they were doing. They didn't know how to talk to me. They didn't know how to answer my questions. And so, by the time we basically moved out, got onto the land, everything, I was like, I need to do this. Like, I need to start doing this for other people because I have this experience now of not only knowing how to do these loans operationally, but I can actually have these relationships with my clients and know what they're going through and actually be able to walk them through the process more than just here's a loan. It's,
Right.
Have you done all these 9 steps, up to this point? And, it's interesting because, and I wouldn't say that they're the same, but the lending and construction world are very dynamic in the sense that we are constantly kind of battling with different code changes and guideline changes and these kinds of things that we have to be very
Yeah, you got to solve problems.
diligent,
Yeah.
right? Yeah, exactly. We've got to be up on our guidelines. We've got to be diligent. We've got to be able to kind of get ahead of these problems before they become, bigger. So anyway, that's kind of how I came to this conclusion was I'm here and I really want to help people and I really want to help people be able to do this in, the best way. So anyway.
That's awesome. So it's like interesting because I'm not super familiar with the construction loan process because like every new build I've ever done, either my clients have had the money to pay for it and it wasn't a construction loan, or I've gotten private lending and done specs or subdivisions and stuff myself. So I've never, ever dealt with a bank. And my like mentor, when I was doing subdivisions, he's like, you have it way too easy. You need to go get a construction loan from a bank and see how hard they make it for you so you understand how good you have it. Like he said that to me like multiple times. And I was like, why would I do that? Like that sounds miserable,
Oh,
and so
gosh.
the overall, kind of feedback and sense is that construction loans are horrific. It's not an easy process. So I have fear about it when I have a client that's like, oh, where do we go get a construction loan? Like where we live, I think there's like one person and I don't even like know how well it goes. I'm sure there's more, but like I only know of one person. And I had two people ask me yesterday, do you know anybody who does construction loans? Because I had 2 client meetings and they're new builds and they need to get loans. And I was like, no, I don't. And now I know. So guess who I'm going to be calling today and telling about you if you can convince me that they're good. So walk me through. If I let's say I'm a buyer or just I have a piece of land. Let's say I have a piece of land and I have a contractor and I have a contract to build a house and I have building plans. Let's say I've got those 4 things nailed down. What happens next?
So ideally, in a perfect world, I'd like to get with that client before all of those things take place, just because they need to understand what they actually qualify for and what they're going to be comfortable with that budget. Because ultimately, what I keep telling people is that I'm like, go to a contractor and show them your Pinterest board. Show them, what you're thinking in your mind, because I feel like we all live in this universe of champagne taste on a beer budget, right? Especially with interest rates, because unfortunately interest rates are higher and that does impact your budget. But yet if you have it in your mind that you want, this marble bathroom and you have, all of these like intricate finishes and everything like that, but then you get online and you Google the price per square foot and you're like, I can do it at 300, 350, a square foot. And then, you make it all the way. And then you finally get to me, after you've had all those meetings and you've got your plans and you've got everything and you get to me and all of a sudden you're like, ooh, I don't qualify for as much as I thought I would.
Well, it's kind of like the same concept of, I also have my real estate license. And when I have a buyer that comes to me, the first thing I say to them is, I'm not going to take you. I mean, I'm not mean about it, but I'm not going to take you to go look at houses until you talk to a lender, because I'm not going to show you something out of your budget. I'm not going, and are you qualified? Do you know that you qualify? How much are you comfortable with the payment? Because really, what it comes down to is we've got all of these, ideas. And until there's actually somebody telling that buyer or that client what their monthly payment is going to be and what their interest rate's going to be and how much that's going to cost them, that changes everything. And they no longer want that marble bathroom. It's like, I will take a fiberglass insert. Thank you.
Yeah. Well, so to go back to your question though, if somebody had all of those things, and let's just say in a perfect world, all of those things would be done. The next thing I would do is, depending on what lender I put with them, because I am a correspondent lender, so I do have kind of an array of construction lenders that I work with.
Okay.
So I determine what is going to be the best fit for them, whether it be, different guideline issues at different ones or better rates at different ones.
What are like in the construction loan world, you can do, I could, if I sound like an idiot right now, just tell me that's fine. Well, you might change your mind when I ask this question. Just kidding. The question I have is, you can get a construction loan and then that construction loan turns into your conventional loan, right? Yes, that's one option. And then I've had people that say we do a construction loan, but we do not, as the bank, roll that construction loan into your new loan. You have to go get another, mortgage to pay off, basically like a refi. Is that kind of like the two pathways in construction loans?
For the most part, yes. I mean, the other change would be if they are getting a jumbo loan or if they're getting a conforming loan, and that's going to make a significant difference on which pathway they're going to go.
Do you suggest most people go with, because to me, it seems easier to just, take draws on your construction loan. You've got the loan with that bank or with that, lender, and then you just turn into making payments on that and you don't have to go through all the rigmarole again for the final loan. Is that generally what you suggest or what do you prefer?
It all depends, to be honest. It depends on what their situation is and what, where their credit score is, what their assets look like, what their reserves look like. It is becoming a lot more common to do these single close construction. But with both of them, where we're predicting our interest rates to go, both of them are going to end up requiring refinances, later on, in their life anyway. And if you look at it from the perspective of you probably have between 12 and 18 months in that time frame of the construction, by the end of 12 or 18 months, they may want to refinance out of it. Now, some of these loans, these single close, have what they call like a float down policy, and they will come down where the market is at the end of that construction time frame. But some of them,
so you're not like locked into a rate on that option.
So you're locked in, but yet the float down kind of supersedes the lock, if that makes any sense.
Yeah.
So at the very end,
you're not going to go up.
Correct. Right. Correct. You're not going to go up. You have the potential of going down. Awesome. Yeah.
Okay. So I come to you. We can change the story. I come to you at the beginning. You tell me how much I can afford. I go get the land, my contractor, and I'm guessing you need a contract signed. Like, what are the requirements of somebody? What is the experience going to be like? How painful is it going to be?
For the contractor or for the borrower?
Well, I kind of want to know that too, but no. Yeah. How painful is it going to be for me? That's all I care about now.
So they're definitely not cookie cutter loans. They're not a loan product that is as easy as, hey, I've got a wage earning position and I'm just going to go out and buy a traditional home. Those, you can do in, 15 and 20 days and we can be done with it.
Right.
But these ones, I always tell people, if you really want this, like there's going to be more work on your end. It's not just going to be, hey, I'm going to gather, hey, I'm going to submit to underwriting. It's going to be, hey, we're going to probably have to submit to underwriting a few times. I look at it in two parts. So I qualify the borrower like for a traditional loan just to determine what their max budget is. And then we get into the nitty gritty on the second part of the approval, which is basically all of the builder stuff. So your budget, your plans, all of like the city stuff, the county stuff, maybe, and then your contractor approval. Now, on a contractor perspective, it's going to be kind of a pain in the butt, but I try to do as much as I can for each of the contractors that I work with to do things for them and just kind of be like, more like sign here, give me information here, that kind of thing, so that it is very turnkey for everyone in the process. Now, for a contractor to be approved, it's fairly easy for a contractor who regularly builds homes to get approved with these lenders. All you really have to have is 3 most recent construction projects in the last 3 years and references to those. They have to obviously validate your license, your insurance, all of that kind of stuff that you'd have to carry anyway. And then the process after that, point after, everyone's approved and everyone's ready to go, we have our short escrow period. And then we start funding. And typically the first draw is going to be possibly paying off that land loan. And then could be also included in, the first round of materials and labor costs, whether it be like, hey, we're going to do foundation, framing, windows, roof, whatever it may be for that first draw. And then we, carry on with each draw thereafter. But
okay, so I want to back up a little bit.
Oh, yeah.
That's a lot of information to digest. So no, I want to know, for a borrower, they they get you all of the information that they're, would be required to qualify for any loan, right? All of their documentation. Then what do you guys require from the contractor? Like if I was I'm like, hey, I'm going to go find a contractor. What do I need from that contractor in order to make this go through? Besides obviously the contractor has to be qualified to get that part, but what kind of falls on the buyer to make sure that they're getting you the information from the contractor so that if a contractor isn't, aware of it and a buyer is not aware of the stuff, what kind of things are you guys asking for?
So for a buyer, so it's going to be different as far as like a spec when a contractor goes and gets a loan versus a buyer getting a loan.
No, I'm talking the buyer getting the loan.
Yeah. So because I'm actually handling the communication, for the most part, the buyer, I need the contractor's contact information.
Okay, so you're communicating. You're communicating directly.
Correct. And so it comes down to, having that budget dialed in to what we require. And each lender is going to be a little bit different. Some require, a 5% contingency or a 10% contingency, making sure that budget, includes that kind of thing. And
that's actually a really big deal, because I had a client yesterday say that to me, that the lender's is saying that they need a 10% contingency, and just briefly explain that to the audience, what that means.
So the contingency is like the what if. It's, in a perfect world, here's your budget. But unfortunately, and we run into this, I would say more so on renovation than ground up construction. But, what if something goes wrong and this actually isn't the cost? What if it ends up being more expensive? What if you break ground and you find a gigantic rock that, you now have to blast out of the ground or something, And so now all of a sudden that just added to your budget and labor costs. Well, if you don't take into account for these what if situations, then we can kind of run into problems on the qualifying on the loan side. So we make sure that we have this just what if kind of dollar amount, and it's usually a percentage of the overall loan amount.
Right. And so in their scenario, this actually put them above what they wanted to actually pay. And I think it kept them from even qualifying. Was 10% contingency was, if you're at a $600,000 house, at $60,000, and, that pushes you beyond your budget. And so I think that that's really important to know that, that's why I think it does go back to have the conversation first, because if you knew that you're okay with 600,000, but you've got to put in a 10% contingency, that means your contractor's bid needs to be at 540,000, not 600. And so we had this really long conversation yesterday, how could we literally were trading tile showers for fiberglass inserts to try to get their stuff down, because the cost of construction obviously isn't cheap, but they had to sacrifice some stuff to be able to qualify for that loan. And I was just I was frustrated for them that they felt like there wasn't any other option there. The thing that they came in frustrated about also was they couldn't find any lender. And I don't know if you do this, they couldn't find any lender that would loan on ag property and build a residential house on ag property. It was certified ag, not R1. And there was only one person in, I don't know how much they looked. And I don't know if you do something like that, but that was their, they were kind of stuck into a pigeonhole. So they couldn't go to someone that had a 5% contingency or something like that. But maybe what I'll do is I'll send them to you and you can figure out if
I'm happy to look into it. That is the interesting thing about this business, though, is that everyone finds these questions that come up that you never see before.
Right. I was oh, I didn't know that.
And unfortunately, ag property is that it's kind of looked at like commercial property, because ag property is income producing property. And so that's where just kind of lending as a whole, we run into, even when I worked for a retail lender, and we would just lend on just a traditional house. If you had 40 acres and you had, these outbuildings were ooh, and all of a sudden.
Why is that though? Because of the,
what, to be honest,
I don't even know why.
Really don't know. I think
those trees are paying for the mortgage. Why do you give it crap?
I agree. I think it's more the risk as far as a borrower getting in over their head with a property that's going to be way too difficult to maintain. And if they don't have that experience in maintaining that kind of property, And if they did, then they need to go get a USDA loan that, satisfies it. But actually, that's what kind of popped in my head was that USDA does one-time close construction, and they might lend on ag property. So,
well, that's good to know. Okay, so after you make contact with the contractor, the buyer's qualified. What does the draw scenario look like through the course of construction? So I know you mentioned at the beginning, you get like a first draw to maybe pay off the land if there was a loan you used to purchase the land. And then what is needed from the contractor and the buyer to kind of through construction? What does that look like? Are there inspection requirements? Are there are photos okay? Like, what's the general experience?
Each lender that I work with, some of them have different ways of doing things. For the most part, all lenders will require that you, in the budget package and all of the contractor docs that we collect, we're going to slate out the whole entire draw schedule, what everything looks like just for the course of construction, so that everyone's aware from the beginning what's coming when, what's the next step. In that time frame, let's say we've done the first draw and the contractor is basically saying, hey, we're ready for the first draw. We need to pay off, XYZ people, or we need to order XYZ materials, whatever. The lender, the contractor, and the borrower all have to sign off on that approval, because if the borrower feels like the borrower is our eyes, essentially, the borrower is the one who's basically saying so our contractor wants this money, but yet the last time I talked to them, the flooring wasn't ordered, this wasn't done, this wasn't, whatever it may be, they need to also be a part of that approval process and getting that money back out.
And does that money go to the borrower, or does it go to the contractor? How does that work?
So again, different lenders, different requirements. For the most part, a majority of lenders are using like a third-party company to handle the draws, and they actually issue them out to the subs directly and then issue the contractor their payment directly.
So you provide the invoices for the subcontractors, and that way you're kind of avoiding the liens and stuff.
Correct, mechanics liens and that kind of thing. Correct, yeah. So at least then in that way, everybody
this already
is
aware making me feel sad, frustrated. I'm like, oh God, you have to send all of that out. Oh my God.
So from my perspective, dealing with like the third party companies, they're actually really easy. As long as they have the contact information, they send the checks. And then as the contractor, you don't have to do anything. You're just collecting your check, and then you're not responsible for the divvying up of the payments. Now, I know some banks still will send it all to the contractor. Then I've worked with a bunch of different contractors who prefer it all different ways. Some of them prefer to control the money, and then others prefer they don't want to touch the money at all. And so, yeah, it's all dependent.
It's all dependent. I know it's not like we already collect all the money and pay all the bills anyway. So it's not an easy thing, but I'm like another person. I don't know. Cause I think I am kind of a control freak about all of that, making sure everybody gets paid, and paid on time and paid quickly. Cause that's probably the biggest thing that, stresses me out is I really pride myself on paying my guys quickly, immediately. You know what I mean? Mm-hmm. And that's always, and I have enough money, I've built up my business enough to be able to pay everybody even before I've been paid. So what's kind of say I'm the drywall guy and I just finished, or drywall gal, and just finished, the drywall, and I sent my invoice to the third party person. How long is it going to take for me to get my check? Do you have any idea?
Not very long. Usually those checks are drawn within 10 days, or the wire goes out within 10 days. So, I mean, I've seen it to where it's actually being done in 48 hours, as long as basically everyone has, submitted proof of work completed, or, whatever, signed things off. The borrower has signed it off. 9 times out of 10, it's honestly, it's the borrower I'm waiting on.
I was going to say, it's probably you didn't DocuSign your thing.
You got to prove it.
Does the borrower have to sign off on that subcontractor's invoice?
Does the borrower have to sign off on the subcontractor's invoice? As far as their approval?
For the payment? Yes. Because to me, that seems...
As long as it matches the budget in the beginning, then they don't have to sign off on the approval. It's all going to go through you as the contractor to,
because I just, the protection of your markup and, your, as the contractor, if the borrower is seeing every single invoice that you're getting from the subcontractor. Is that their experiences? And like, because generally contractors are marking up and
oh, for sure.
And then you're like, here's everything. And then
for sure.
I just didn't know if that's part of the experience where everything's just totally transparent and they see everything and exactly what the contractor's making. Is that what the lender wants to see?
Not necessarily, but I'll be honest, I think the majority of borrowers that I've talked to lately know exactly how much each one's being paid as far as the labor costs. Mm-hmm. And the only reason I feel like I know that is just because how many complaints I receive on a daily basis of people being overpaid for whatever. And I'm like, you know what? Go out there and do it and see if they're being overpaid. But for the most part, as long as in the beginning, when you establish that budget and we have that package, the invoices later that come through, as long as they don't exceed that budget, aren't necessarily being reapproved by the borrower. They're just being approved by you as the contractor.
So they're just approving like the payment that the
correct.
work is done.
The work is completed and it's done and it's ready to go. But like I said, a majority of the time that the people were waiting on to approve that or to sign like the DocuSign or to sign like the acknowledgement or go into their portal and check the boxes. Usually the borrower. Everybody else is like, okay, let's go.
I want my money. And the borrower was like, I don't want to send it. Yeah, that would be frustrating, I'm sure, for everybody.
Yeah.
Okay, then, so after you finish everything, all the draws are done. So majority of the lenders don't require somebody to go out and like physically see the status. You're depending on the borrower to sign off on that and say, okay, yes, we've completed 4-way and we're ready for that draw.
Well, on top of that, you also have county and city inspectors come through. And so when you get those inspections, we upload those.
Oh, okay.
Yeah, we upload those and everything so that the underwriter can see that those were completed. It's not just that like, hey, everyone says we're good to go, but no, we'll require those.
But there's not
no one's coming out from the bank.
Okay,
no.
That's what I was wondering, if like a bank person comes out and is like, let me see.
Not necessarily.
Okay.
No, because we'll do the appraisal. We'll do 2 appraisals and we'll do one at the beginning to determine what the value is, intended to be at the end. And then we'll have the second appraisal towards the end to where we have that completion. We've got that collateral. And then we do like usually a 2 approval phase. So we've got the one, at the very beginning when we start the draw, and then we reapprove the borrowers at the end, which it's quite funny because one of the last calls that I did with another lender, I was asking about that reapproval time frame at the end. And I was like, what happens if basically the borrower's, credit score just completely plummets, right? Like, so, hey, they have like an 800 credit score. Like, you're not just going to take the house away at the end. And they're like, nope. All it is as long as they've been making their payments, they just do that reapproval at the end to see if they need to hang on to it as a portfolio loan or if they're able to sell their loan after the fact. But
okay, so once you've been approved, you can go buy 7 cars and you'll be good.
As scary as that sounds,
you're like, please don't.
Yeah, but it's crazy because when and my husband and I had bought a new construction, like a track home, years ago. The frustrating piece of that track home experience is that you don't own the house, you don't own the land. So when you get pre-approved, a year prior or 9 months prior, you need to make sure that your credit is all the way fantastic and your assets are good for that whole time frame until you get to the very end. And then finally, your end of your escrow is when you actually get that certificate of occupancy and you get to move in. Whereas at least with the construction,
you can live your life
at the beginning. Yeah. You can move on.
Yeah. Wow, that's cool. I didn't know that. That's neat. So then if it was just the loan that transitions into, a standard 30-year mortgage, you get the certificate of occupancy. How long does it take to close on that scenario once everything's kind of completed with the house?
So once you're at that final draw, we usually do, 12 to 24 months. Actually, I think we can go even as low as 9 months. California is kind of hard on that regard. But as far as the building time frame, we try to make sure that everyone's on time. So at the end of that 12 months, that's when you're going to get your certificate of occupancy. That's when you made your last interest only payment and then the loan transitions. But for the most part, once you have made that final payment and you have your certificate of occupancy, which is really just you waiting on, city, county, that kind of thing, you can move on in and just keep on making those payments. There's nothing that really stops you.
But so you just, said something that
Mhm.
it was important. The payments during construction are interest only. You're not paying
Correct.
principal. Okay.
Correct. Which is really like helpful, especially if you I always
And the
describe it like a credit
borrower
card.
is paying that interest only payment on the draws during construction?
Correct. So that's why I always describe it like a credit card. So basically, let's say you've got this, $500,000 credit card, but, you've only spent, $100,000 on that credit card for, your foundation, framing, that kind of thing. Until that next draw where we issue you the next, 80 to $100,000, you're only making interest only payments on that first $100,000.
On what you have. Okay.
Mm-hmm.
And what are your interest rates ranging for those construction loans right now?
So it's so funny.
You're
I actually posted to my Insta story the other day that there's such a wide range because it truly depends on what you're doing. Conforming is going to be very different than jumbo. And then we also
explain the difference between conforming and jumbo.
So conforming is going to be you getting a smaller loan amount. And what I mean by smaller loan amount is that every county has their county loan limits. I'm super familiar with Placer County and Sacramento County, which I say that and off the top of my head, I'm like, shoot, what's our loan limits? Because it changed in January. It's 762 or something like that is our county loan limit.
On it.
Yeah. And so anything beyond that threshold, you're considered into jumbo territory. And so those loans are higher risk loans. Obviously, we're lending you a lot more money, whereas these loans that are under the county loan limit are usually government insured, or you might be paying mortgage interest on them. And so they've got a little bit less risk on them. So they typically come with a little bit better interest rates on the construction loans than the higher in the jumbo category. Okay. Right. And then, so I do everything from, conforming, construction, land loans, all the way up to private money. So private money is going to be upwards. So I would say down here in the 6% range with the smaller loans, all the way to about 11% on the private money.
I was actually just talking to my clients yesterday about private money for construction loans. Do you guys do that?
Mm-hmm. Yep.
And it's way easier, right?
Yeah. So there's it just comes at a cost.
Yes, absolutely. The interest is if you have a good contractor who can get your shit done quickly,
There you go. Exactly.
Right? Give me a call. No.
So, what I tell people, so majority of the people that talk to me about private lending are ones that are wanting to go the owner builder route. They don't want to hire a general contractor. Or in my case, we didn't hire a general contractor, but we hired a owner builder consultant who just so happens to have his GC. So we've got that in our back pocket, but most lenders will not allow you to do owner builder. So sometimes we've got to figure out a way around it. But one of those solutions is to go private money. Okay.
And the private money lenders, you have a pool of people that just, how did you get to kind of brokering and managing private money?
So there are a bunch of different pools in kind of the broker world as far as what they do. So sometimes there's investment groups that only fund on certain kinds of private money projects, whether it be, fix and flips, spec builds, that kind of thing, that they don't actually want to work with
buyers.
Right. But they want to work with contractors. And so that's one private money pool. And then the other private money pool would be other investment groups who are lending on, higher risk projects. And that would be owner builder construction and that kind of thing.
That's cool. So you really offer a wide array of options. Would you say you kind of specialize in things that are a little bit more difficult or unique?
You know what? Yes and no. I mean, I feel like everything is pretty unique right now, but I love this world. I love this space. I'm fascinated with all the different kind of ideas that people have and all the different ways they want to do things. And I always kind of have it in my head that California is a certain way. And then I'll talk to certain people in California who are building a super efficient house for $250,000 and they just want a private money loan just to be able to get it done so they could do it on their own. It blows my mind. And so, every day I feel like it's a totally different, unique situation. There's been a lot of completely off-grid questions that I've been asked, and completely off-grid is really hard in the lending space because we don't easily lend on off-grid homes. And so it's really caused me to really do a lot of research in figuring out all of these different specific loan products. So I wouldn't necessarily say my niche is like doing things like that, but it's caused me to do stuff like that. And I would say I'm pretty good at researching and finding, what
the
we can do to kind of, because I wholeheartedly believe that there is a solution for everyone. There is a loan for everyone. It's just, it either may take a little bit more time to find it, or it might be a little bit more expensive.
And so are you, like, you're just qualified to loan in California?
I'm California, Nevada, and Colorado. And then next I'm working on Idaho and Montana, I think are my two other goals. But
that's awesome.
Yeah.
So I have one last, well, I don't know if it'll be my last question, but I have one question about, since the transition of, working retail, COVID, staring out the window, seeing your son and husband playing without you. Are you working more or less now?
Oh,
and have you got to go outside?
I definitely have gotten to go outside. I think I'm able to work more intentionally in certain times. I feel less guilty about taking time for my family. And because it all falls on me, it's not really like I owe someone else my time. It used to be, I remember this feeling of just stress of like going and picking my son up from school and then dropping him off in school, vice versa. It was this like mad dash. Like, I got to get him there. I got to drop him off. I've got to immediately go back and I've got to get in front of my computer. And I don't have that feeling anymore. So to say that I work less though is probably not accurate.
Not true. Yeah.
But to say that I'm spending my time intentionally better would be accurate. And that I feel like my kids are getting a better version of me now than they got before. So that's
good. So it's worth it.
That's that.
It's been worth it.
1,000%. Yeah,
good.
Completely.
That's amazing. Completely. Okay. Well, now that I know about you, you're going to get all the people. And she's not very far. So if you're in Chico and you need a construction loan or private money loan or whatever, I even love that you're doing like the fix and flips and remodel loan too, because people don't even know that they can get, something besides a HELOC or something like that for remodel.
Oh, and there's so many cool ways to do renovation loans right now that are pretty rad. And ways that even I talk to agents to kind of save deals that, when a borrower's basically like using all their money to be able to buy a house, but now they have no money left to buy like appliances or like replace windows or something. I'm like, you can just switch that into a renovation loan. We can finance in appliances. We can finance in new windows, and boom, you just save that loan. And
you're like a little wizard.
It's pretty. Sometimes.
I feel like that is like the role, like, you need like a cup that's like, I'm a wizard, how like I think my dad, when he was an accountant, my dad's an accountant and he had a cup that was like, I am an accountant, not a magician, It's like people think that like lenders are magicians.
Oh my gosh.
And when you have a good one, I feel like you are, like just like problem solving at its highest level.
For sure. We figure out solutions to make sure that everyone still just stays in the transaction and we get it done.
Yeah, that's right. That's amazing. So who do you like, how do you get a majority of your business? Like, what is your biggest kind of like, is it referrals? Is it agents? Is it contractors? Like, what's your funnel for getting new clients?
Oh my goodness. It's an array. One thing that I found was interesting that I tapped into was joining builder Facebook groups. Not for contractors, but for owner builders looking for advice on like finishes and that kind of things. There's a lot of people in those groups who are looking for lenders in certain areas, which is really interesting. I would say like my traditional loans, my husband's a firefighter. So I swear, I think I get a lot of my loans from the fire community. But yeah, those Facebook groups are pretty rad. And then just, I say I've cold called contractors and emailed contractors and sent off flyers and everything and have been able to get a lot of business that way.
That's awesome.
It's been pretty, I would say, organic for the most part, just because I started this on Instagram to kind of track our own home building process a few months back. And so a lot of people started reaching out to me on that. And I'm like, shoot, I don't have like my license and everything on this. Like, reach out to me on my personal side, my license never exposed and everything on that one.
Right.
But yeah, so it's honestly, social media is an interesting world, but I would say that's a majority aside from these other little kind of niche areas of my life. But
That's awesome. Well, I'm excited to just know that you exist and know that you're not too far away and that there's options and for me to just like learn about it from the contractor's perspective and like help, because I think a lot of people think a project isn't possible and it feels impossible, to do a remodel or a new build if you don't have the money sitting in the bank, and to know that like there is loans and ways out there to be able to do the project you want to do and have somebody you trust to help you, through that process. And I think you and I are going to do something for sure.
Heck yeah. Bring it on.
Okay. So tell people where they can find you and do a loan with you.
So my website is jllens.com. So it's my first and last initial and lens.com, jllens.com.
So
and you can email me.
It's LENDS.
That is correct.
Okay.
Yep.
I'm spelling it correctly.
That's my website. And my email is just my first name at jllens.com. JENNAE at jllens.com.
Perfect. And your website is beautiful. Good job.
Thanks.
Thanks. Of course. And I really am going to share your information with a few people today. So I'll probably just send an email and CC, send an email to both of you and the clients and see if you could help them out. Cause I have a couple people that are kind of in the same boat and it was just like, God was like, here's Jennae raining her down. Oh, she will help you. Perfect. Well, it was so nice to meet you. And we are
so nice to meet you too.
Off today and
Sounds good.
And thank you for doing what you're doing in this world.
Absolutely.
Good people that we can trust, that, understand what it's like, and they aren't acting or saying stuff that and they've never been through it. They don't know what it's like to build something. They don't know the construction process. They don't know that it's stressful and there's a lot of paperwork and things that need to do. And like, you're just doing everything you can to help facilitate that. I love it. It's beautiful.
Absolutely.
Well, thank you so much.
Thank you so much.
Of course. All right. Have an amazing day.
Bye. See ya. You too. Bye.
Thanks for joining me today on the She Build Show. My name is Stefanie Olson. My hope is that this episode leaves you feeling empowered and ready to boldly take that step into building the life that you envision, 1 2x4 at a time. And if you can do me a quick favor, please leave me a 5-star review on iTunes. I get giddy over reading the reviews each week, and I will choose one special person to win some She Build swag. Make sure you add your name to the review, and I'll reach out if you're the winner. Thanks again for hanging out. Be sure to visit me at theshebuildshow.com, where you can ask me questions and share with me what you're building.